Saswata, thanks so much. Appreciate you taking the time to speak with us. My first question to you, exactly that. 69,000 crore in equity has been raised this year. The breakup, at least for the QIP part that our research team had gathered, suggests that just in terms of QIP, via that one instrument, the amount you've raised is about 33,000 crore. It's highest in at least the last 5 years for which we had comparative data. That's a large amount of equity.
Hi, morning to both of you. Yes, it is, it's kind of on one hand a reflection of the general buoyancy that one is witnessing in the stock markets, and clearly there is a lot of liquidity that is looking for opportunities. But at the same time, I think what is important to distinguish here, and particularly since the comparison is between private and public sector banks. As far as the private sector is concerned, I think the quantum per se is substantially higher than what the PSU banks are raising. But more importantly, I think the key point to bear in mind is that as far as the private sector banks are concerned, their capital raising seems to be more from the perspective of future planning, growth. Sure, some of that will also sort of get consumed due to the risks that will likely unfold on resolution of certain bad loans and so on and so forth. But clearly, I think, in my opinion, I think what the private sector banks are essentially doing is building those war chests for the growth opportunities that they foresee. Whereas when you look at the public sector banks, their capital raising obviously has come towards the fag end of Basel, and particularly there are banks which are flirting with ratios which are closer to the regulatory minimum. So it's still, so I'm not very sure as far as the PSU banks are concerned how much of the capital raising that they're doing by themselves will likely go in for growth. So most of that basically is likely to be consumed by risk.
Okay, Saswata, I'll come to the private banks versus the public banks in a minute. But if you look at the aggregate, so the aggregate is this equity that people have raised or banks have raised in the market. Plus, you have a 2.11 lakh crore capitalization plan coming from the government over, say, next year at least, over the next financial year. So the whole story about the fact that the Indian banking sector may not have adequate capital, which was a view which was being thrown about at least until 6 months back, that has completely changed, right? No one can now argue that at a system level we are not capitalized to fund growth.
No, absolutely, and I think the fact that the government has finally decided to do something regarding this capital gap is certainly a very, very welcome move. We have been, as you may know, I've been carrying a negative outlook on the sector for a number of years. That outlook certainly is a lot less negative now. Of course, we are waiting and watching to sort of get a little more clarity in terms of how this capital is likely to be apportioned and to which banks. But certainly, I do agree with you that the fact that a large part of the missing piece of the puzzle is now hopefully likely to get addressed. The future outlook of the Indian banking sector, particularly PSU banks, is certainly a lot less negative now.
Saswata, so that's the supply side. The supply of capital now, as you also said, is very much there. Now, let me just get your views on the demand side. What do you think these private banks are seeing that is, sort of spurring them into raising, such large amounts of capital? Sure, some of it could be opportunistic as well because the markets are good. But are we really anticipating a very rapid pickup in credit demand? I'm not sure whether that expectation is grounded in reality.
No, we are not. We are not, and most certainly, my view is not very different from yours. I certainly see a degree of opportunism there, but at the same time, I think there are certain arguably green shoots in certain sectors that some of these private sector banks are already witnessing, and which is why I said they're sort of preparing themselves, and which is the key difference really, if you see, and always has been, between a private sector bank and a public sector bank, that typically private sector banks tend to be a lot more forward looking when they're planning some of these things, whereas public sector banks are a lot more reactive in nature. And I think in that light, I think since there is a lot of appetite in the market, and quite clearly they are in a position to sort of exploit and leverage that. I think that's probably the reason why private sector banks are sort of raising the money that we're seeing they are raising. But at the same time, I think probably not in the next 3 or perhaps 4 quarters, but subsequent to that, we do expect to see some recovery or some rebound in terms of growth. Certainly sectors like SMEs, we're already hearing noises around them, and largely banks, both public and private sector banks, are sort of looking at that space a little more actively than what they've been looking in the past. So all in all, I don't think in the short term we are likely to see much change in terms of growth. But perhaps sometime after the first half of the next financial year, we could potentially see some pickup.
Saswata, would you also think that the story of these private banks gaining market share would continue into the next credit cycle now? I mean, yes, PSU banks have the capital, but again, there's uncertainty about, which bank gets it, how, the government is going to divvy up the capital, etc. Do you think private banks would sort of command a larger share of the incremental credit demand in the next cycle?
Well, that's a very valid question, and I think yes, most certainly I think the play of private sector banks and for that matter even NBFCs gaining market share away from the public sector banks is a story that will likely to continue at least over the next 1 year or perhaps even more. And that's got to do with the fact that, yes, while, we talked about the government recap plan, 2.11 lakh crore recap plan. But what is important to note there is that one, of course, how that is likely to get apportioned, and who among the banks, among the list of 20 banks, which are the banks which are likely to receive growth capital out of it? Because if some of the indications that are coming out from the authorities one has to sort of look deeper into, sort of read deeper into that. It seems that not everybody is going to be part of the growth capital. So it's probably going to be very select banks out of that lot of 20 which are likely to receive that growth capital, while there will be a sizable lot which will just about get regulatory capital so that they don't breach minimum ratios. So yeah, in that respect, I believe that the private sector banks, and given the fact that now they have also raised substantial capital, are in a lot more advantageous position in terms of gaining more market share going forward.
Absolutely, that's will be interesting to watch how that plays out. Saswata, I have one last question, or at least second last question. This is in terms of the regulatory capital, we should be fine now, right? Both to meet Basel III and if there are implications of IFRS. I'm not sure we've. Do you all have a number of whether if that IFRS comes into play on time, what will be the incremental sort of provisioning that banks would need?
Well, I mean, right now it's very hard to say, but we are going with an assessment of anywhere between 30 to 50% increase in the provisioning levels, and that is subject to the sectoral exposure the banks have. But yes, I think at the very least a 30 to 35% increase in provisioning is not going to be out of order, provided, of course, Ind AS is implemented. Because if I believe, I think the final guidelines are still not yet have still not yet been released by the central bank.
Okay. Just last word, Saswata, and this is not on this capital raising story, but I'm wondering if you have a view on the large number of smaller public sector banks that have been put into this prompt corrective action framework. It's unclear to us as to whether this framework is going to work. Banks like Indian Overseas Bank, which have been in it for more than 18 months, have seen no sort of perceived, no obvious improvement. Any thoughts around this framework, why they are, so rapidly putting banks in there, and whether it's going to help in any way?
Well, why they're putting banks in there is because some of these banks are in very, very poor financial health. I mean, they are looking at capital ratios which, if you adjust for the amount of unprovided stress on their books, are already would start looking well below the regulatory minimum. And therefore, I totally appreciate the concerns that probably the regulator is showing for some of these, because we have been pretty concerned over these lot of banks for quite some time now. So it does not certainly come as a surprise, but I think I mean, my reading of the situation is, and you need to look at it in the context of one recap and also the sort of messaging that is coming out from the authorities side, wherein they're looking to implement more reforms and so on and so forth in order to sort of leverage this whole recap move. And my sense is that perhaps I mean, government is a lot more serious, or is certainly looking increasingly more serious about sort of right-sizing the sector, and therefore, if you look at it in that context, and the fact that they are already talking about that capital will be apportioned on the basis of merit and not necessarily on a pro rata basis, sort of looks to show that perhaps some of these banks may be forced to right-size or even eventually merge at some point with a stronger bank, because the rationale of having 20 different banks doing the same thing just in varying degrees of efficiency to us has always had very little meaning. And I think the perils of of a system like that, I think those lessons arguably have already been learned by now.
Right, absolutely. Maybe this is a halfway house, between some sort of more meaningful reforms. Saswat, great speaking to you. Thanks so much for making time for this conversation on the changing mood around banks driven by all the capital raising.